We are going to discuss the types of charts today. The first type of chart, which is the most popular, is the candlestick. The second chart which we will discuss is the bar chart. The third is the most simple, the line chart. So we will be starting off with the most popular and the most important, candlestick. A candlestick is generally formed in two colors, that is red and green. First of all, we will look into the structure of candle. A candle has two main components. First is the body, second is the wick. The whole red part and the whole green part is what we call body. This part, this and this, we call it wick. Some people also call it shadow, some people call it tail, but I call it wick. Okay, so we will be using wick. Now we will be discussing about the colors of candlestick. In a trading session, suppose let's say we are looking at the daily chart. In a daily chart, a trading session begins at 9:15 and ends at 3:30 in the afternoon. During this session, price of a particular company doesn't move like this in a straight line. The price always moves up and down, it oscillates. So a candlestick gives us four important factors of a particular trading session. It gives us the open price. Open price means the price prevailing at 9:15 exact when the market opens. The first traded price is the open price. Then it gives us the high during the session from 9:50 to 3:30. The highest price achieved by a particular stock is given in the candle. The lowest price is also given, and the closing price is the price at 3:30 p.m. So all these four components are shown in a candle. Now how they are shown, let us find out. First of all, let us come to the body. The body represents the open price and the close price. The body, that is this red part and the green part, represents the open price and the close price. Now a green candle is formed when closing price is greater than the opening price. It means that, let's say stock A opened at 500 rupees and closed at 515 rupees. A green candle will be formed. A red candle will be formed when closing price is less than the opening price. It means the price opened higher, say 530 rupees, and it closed lower than the opening, that is 510 rupees. We are just taking assumptions for understanding. So this is all about green candle and a red candle. Green candle represents positivity, red candle represents weakness or bearishness or negativity. Now we will see a green candle. In the green candle, the open price is 500. So obviously open price is lower than the closing price. So open price will be here. I told you body will represent open and close. So this part of the lowest part of the body is the open as far as the green candle is concerned. The closing price is here. It is 510. The opening price is 500. Opening price is 500. Yes. So this is about the green candle. Now let us look at the red candle. In the red candle, opening price is 530. It is more than the closing price, so it will appear here 530, and closing price is lesser than the opening price, so it will be 510. That is, it will be in the lower portion of the body. Now we have discussed about the open and close part. The open and the close part. of the candle. Now we will be discussing about the high and the low part. So high and the low part will be given by the wick. Body gives us the open and close, wick gives us the high and low. So the highest price will be given by this part. It will form the highest price, and the lowest price will be given by this part, lower wick. Let's say here the stock made a high of 535 and a low of 508. It will appear like this. Here let's say it made a high of 515 and it made a low of 495. So this is all about candles, friends.